Hello, everyone. This is Ernie Humphrey, the CEO of Treasury Webinars. I would like to welcome you to our webinar today, Treasury Priorities and Opportunities, a look ahead to 2023. Before we dive into our content, a few housekeeping items. But first and foremost, I want to thank my thought leadership partner today for the webinar, TIS. They share my commitment to thought leadership, but also more importantly, share my commitment to serving the Treasury, AP, and AR and FP&A professions as well. So I'm excited to have my favorite co-speaker, John Paquette. He's the VP of Solutions, US at TIS. We are going to dive into some of the survey results and implications from a recent survey that I conducted. Treasury Priorities and Opportunities, so look ahead to 2023. Before we dive in, I'd like to welcome John to the webinar. John, why don't you go ahead and give us a little bit about your background before we dive in?
Sure, and thanks, Ernie. So I'm John Paquette, VP Solutions for TIS's U.S. market. So TIS, in case you haven't been introduced to us before, we're a specialized provider in the payments, bank connectivity, and cash management space. Joined TIS back in 2019, but really, all of my experience up to that point was on the practitioner side. So I worked about 15 years in Treasury organizations directly before making the jump over to the tech side. So happy to be here today.
All right, thanks, John. And as you'll notice, John and I will have an interactive conversation today. So a few housekeeping items before we jump in. If you're interested in receiving a certificate of attendance today to use to submit for maybe your NASBA or CTP certification credits, please send an email to ernie@treasurywebinars.com. Also happy to share with you the webinar deck today. Again, just send an email to ernie@treasurywebinars.com. We're going to have a short survey and a webinar today. We always strive to improve the ROI we offer our attendees for their valuable time. We know there's a lot of webinars out there, and we think that we are the best in the business. So please let us know how we can get even better. So let's go ahead and give you guys a little bit overview of the survey overview. So the survey, we had 243 responses, company size, really focused in the US. I was happy with the demographics of the survey. Good to see across. So in this case, we were looking at company size by annual revenue. So as we start to dive into a little bit of the analysis by company size, we were really looking at less than 100 million is going to be what we call small, and then 100 million to $1 billion is medium, and then over $1 billion, we're going to call that enterprise for the purposes of our analysis. So you see a really good mix there, almost equally across the board. So we're really as comfortable as you can be, right, from 243 responses, making some inference. But I want to know that really some of the main things about the survey is really to get you guys thinking, asking questions, maybe looking to benchmark, but more importantly, just seeing, right, where you're at and where you want to be and what some of the other companies are doing, and look at some of the whys that we can derive from our survey, and then start to ask those questions internally as you go into 2023. Why, what's coming, how are we going to empower business agility in the headwinds that we are all continuing to face? A lot of those are out of our control. So industries, again, a really good mix across here. Interesting, we have more of the normal construction, which I'm really jazzed about. We have manufacturing, professional service, tech, education. So we see that we've got a broad swath of industries as well. If you're interested potentially in the results by industries, please just let me know. Happy to have a call with you to talk about that. We have to be a little bit more careful there because the number of observations is going to get pretty small. So you have to be a little bit careful on those inferences, but it is good to use those benchmarks as well. So let's just talk about a few of the survey themes. Sorry, I'm giving away the end result here. But just as we've seen, I did this survey last year with TIS as well. The expectations of Treasury are on the rise in 2023. So we need to be able to up our game. The good news is that what we found is that companies, again, are expecting to invest in technology to help us drive performance across the office of the CFO. I find this really interesting, some of the compelling things we'll talk about. companies are really investing in emerging technologies to help empower Treasury success. Companies are also investing in talent as well, which is really, really good to see and continuing from last year. So we have increasing responsibilities, right? Increasing expectations. What usually happens with Treasury, we don't get any staff, we don't get any support. But what we're seeing, at least from the survey respondents, is that companies are going to be investing not only in technology, but people, right, in terms of acquiring talent, but also upgrading the skills of their teams as well. So it's good to see that. And then also one of them, which I think is for me on my soapbox, how we really offer the most value across the enterprise is we should endeavor to invest having more control over areas that impact our success. So APAR, FP&A, and Treasury-related technologies. So some of the results I find particularly interesting. So we're going to look at the survey respondents in terms of the amount of direct control or influence. And so for me, a big pillar of Treasury success is owning that cash conversion cycle. And for me, we need to have at least influence over APAR and even FP&A, and of course, Treasury-related technology to deliver that success. So I know you are excited to have a polling question, so I'm going to go ahead and launch that. So one of the things that we looked at in the survey was to level set what is the role of Treasury, right? And then what does that look like in 2023, but also how does that compare to what you've seen over the last 12 to 24 months? Is Treasury realizing a more strategic role? Is that momentum? Is it overhyped, right? Is it still there? So appreciate it, everyone, if you take a moment to just press the button. Those of you that are interested in receiving CTP credits for today's webinar or certificate of attendance for NASBA, please, you have to answer all the polling questions. So what we'll do, we'll go ahead and leave the polling question up for a few seconds or so, and then we'll go ahead and take a peek at the results, and then we'll take a look at the survey results from our 243 companies that responded and see and do a little analysis of how our audience here today compares to those that have responded to the survey. So let me go ahead and give you guys another few seconds or so. Thank you so much. We have 90% voted. That's really great. The other 10%, wake up, just push the button. So we'll go ahead and close that, and then we'll take a quick peek at the results here. Go ahead and share. So kind of blown away here. I think I almost fell out of my chair. I'm glad to see that 38%, right, key advisor, and then we've got 43%, right, occasional advisor. And so we've got 10% is too much, but we've got only 10%, right, in terms of purely transactional. From my perspective, the journey from even supplier of data is really not that high of a mountain to get to key advisor. It's just a matter of communicating, right, that value and looking at the impact there. John, what are your thoughts here?
Yeah, I think I was surprised to see how many, fall into that strategic sort of category, those top two there as well. I was thinking more would probably fall, sort of in that supplier of data type category still, as you pointed out, making that transition into strategic advisor. But it's nice to see this group has already made that journey.
All right, thanks, John. So let's go ahead and compare. So we saw, right, 38% key advisors. So we still had 25% among the survey respondents, which I thought was rather encouraging. And then we have a little bit more, right, into the purely transactional, but it's too much, but it's only 15%. So I still find that very encouraging. And so if you are supplying that data and reporting, right, it's a matter of really just keep on keeping on that value, the impact, offer your insights, right? So in addition to that reporting, make sure that you're also communicating the story behind the numbers. So John, what are your thoughts here? How does Treasury leader or Treasury manager help move themselves up the ladder, at least if they're supplying the data? What advice would you have for those folks to get that seat at that table?
Yeah, I'd say step one is definitely becoming that supplier of data, right? And typically that means investing in technology to be able to aggregate and share that data throughout the organization. If you think about how many use cases there are for just purely, data elements like banking data, how many departments need that data? And even if you go a little bit further into that, and so how Treasury can drive really key metrics around working capital, for instance, it's a really good opportunity there for Treasury to, show their value as a data provider, and then really, producing insights into that data that they can then share with the business to really move along this sort of the strategic path.
Right. Just to kind of dovetail on it just a little bit, it kind of just came to my mind that really, if Treasury looks to be the leader, right, in technology adoption, so I said we should aspire to own the cash conversion cycle. So let's take a look at what we're doing in AP and AR and FP&A and automation. John, do you think that's a good play for folks to be more involved in the tech side?
I think so for sure. Yeah. So obviously tech is driving a lot of the advancements in Treasury. And I think your point about being in the middle of the cash conversion cycle is definitely critical for Treasury, right? So if you think about cash management, you need to know how cash is moving in and out of the business, which is, obviously why it's so important for Treasury to be inside that cash conversion cycle, have those close relationships with AP, AR, and really, be able to kind of drive analytics and benefits for the business from that position.
Okay. All right. Thanks, John. So again, I'll just point out we have a lot of information on slides. Please let us know if you're interested in the slides. And we're also going to ask you in the post survey if you'd like a copy of the survey report, which we're working on right now, which is much more in depth. But just wanted to take a look at department role by company size. So really encouraging, just to see, of course, and nothing really too exciting. But how you interpret really depends where you're at, but a little bit more transactional on the small side, which isn't really all that surprising. And I guess I'd comment on the first one. Mid-market, we have a higher percentage. From what I've seen, the adoption of technology and the thrust of it has been a little bit higher in the mid-market space. So I think that is what might be driving that to be higher. It's a little surprising to see 26%, right? It's small, so it's kind of a barbell. Either you're all the way in or you're purely transactional. But I think what sticks out to me here is that gap between enterprise and mid-market. And so those of us in the mid-market, but wherever you're at, Treasury deserves to have that strategic role, and part of that, which is going to enable that, is going to be leading on the technology side. First and foremost, for me, it's about facilitating visibility within and beyond the cash conversion cycle and allowing folks to focus on strategic activities, whether that's people in your department, but also across here after the CFO. Wouldn't it be nice if you give the CFO more of his time back in the day and your other department leaders? So just a little color on that. This is probably one of my favorite slides. I apologize. There's a lot of content on here, but this to me is really important to look at. So again, happy to share the slides, but also the recording and the webinar as well. And so I wanted to look at the control and influence of Treasury. Again, I'm really focused on the cash conversion cycle here, but I just wanted to look at, I've always been a proponent of ownership for AP and AR, FP&A. I wanted to look at that as well. That's been a focus of the AFP for several years. Also, I wanted to see if we've gotten to some direct control there. And so the first thing that sticks out to me is the direct control is not as high as I would have expected, not even close for Treasury technology here. And then I was glad to see AP had gone to 45% and AR 40%. I think part of the reason behind that is if you look at technology adoption and just if you look back, AP was actually, in terms of the magnitude of adoption, they were actually out in front of AR, which I found surprising. I do like to see data integrity. In management, FP&A was a little lower than I would have thought, and company strategy is actually higher than I would have thought. Sorry, John, I took the best points, but anything else stick out to you here?
Yeah, no, I mean the same things as you pointed out here. Accounts payable, the direct and indirect control is almost 70%, which is really nice to see. I think we captured a similar survey result last year, and it seems like that sort of level of control is increasing and increasing year over year as organizations recognize the value of having Treasury be really involved in AR processes, right? So Likewise, the Treasury technology thing definitely stands out. You would think the Treasury would have more direct control over their Treasury technology decisions. We have heard some instances where companies are implementing a new ERP system and that has some finance and Treasury applications, and Treasury is
Right.
forced into that. But I'd say that's not the majority of what we're seeing. So I'm surprised to see that number so low.
Yeah, I think for me, I think a lot of times when we talk about the benefits of technology adoption, to me, one of the benefits should be you rely less on your IT team. So I would say that leads to more control of Treasury technology. So for me, again, that's another space where we might want to see if we can endeavor to have a little bit more control. And the thing you got to look out for is minimal influence. And so those aren't too bad, but I just don't like to see even 12% have minimal influence on accounts receivable. So especially in today's world with supply chain disruptions and inflationary environment, and I could go on and on, geopolitics. So let me go ahead and launch the next polling question. So just asking you to share with me, in which of the following do you have the most control at your company? Is it Treasury technology, APAR, FP&A, data integrity, and management? So just wanted to get your thoughts on that one, so we can see where we go on that one. So again, happy to have everyone answer the polling question here today. And of course, those of you that are interested in receiving a certificate of attendance, you'll need to answer all those questions. And so once we take a look at the polling question results, we'll take just a little peek at these results by company size. Again, there's an awful lot here with the control and influence, but this is probably an area where I've gotten into surveys, and this is where I think this is something that others will hopefully grab onto here. This is where we need to really look at the value that we're adding, right? And how we are impacting the bottom line. So let's go ahead, close. Let's go ahead and share the results. So we still see interesting most control, right? Treasury technology is 45%. I'm actually might have thought that would be a little higher. John, any thoughts here before I take all the good comments?
Yeah, seems a little bit lower than obviously what we saw in the survey results there, particularly on the AR side, only 8%, right? And I would have thought that the AR piece would have been a little bit higher as well. It seemed like during the pandemic when cash collections became so unpredictable, DSO went from 30 days to 5 days or something for a lot of companies. Treasury really got themselves tied in tight with the AR department, and I had been thinking we had been seeing a trend of that sort of continuing past a lot of the unpredictability, but it seems like based on these survey results that number's a little lower.
Yeah. For me, it's interesting to see, right? So the color is which one do they have the most control over, and it looks like AP is so far ahead of relative to AR, so that gap is a little surprising to me. I'm surprised there's not more on the AR side, and I think that's where it looks like there might be some low-hanging fruit, right? Just because of all the things going on that's going to impact AR. I've done some research on that as well, talking about AR headwinds and all that on that side of it. So thank you so much, everyone, for taking the time to answer the questions. Again, we have a lot to get through as always. So just kind of flip through these slides fairly quickly. Just some things that stick out here. So we'll look at, we call small, less than 100 million in revenue. The thing that really sticks out here is the company strategy. So it looks like Treasury has a lot of control over company strategy, which is awesome. Have a really good, really high in the AP space as well. So that really sticks out there. Let's go ahead, take a quick peek to the mid-market. So we'll see the company strategy is going down quite a bit there. And then we have operational risk management. There's a bit of spike there, which I really like to see. I guess that's higher than I would have thought, and so that's great. So operational risk, I see that is getting into areas just like insurance, right? Insurance in general, cyber risk management, things beyond what we usually think about, FX risk, currency risk, interest rate risk, so all those things there. And then let's take a quick peek. Enterprise as well. Enterprise sticks out to me again. We have a good percentage in AP and AR. So maybe some people out there listening as I get off my soapbox. It's so, we kind of did a preview, but wanted to look at the responsibilities of Treasury, right? So what's that going to look like? What did we see going into this year? So we saw Treasury responsibilities increase significantly, still over 1/4. Some of the folks increased slightly, 77%. Different percentages. This is not the same data. It's not the same people taking the survey. So we saw that momentum there coming in 2022. That hasn't slowed down yet in 2023. So that's a good thing, right? So as we start to look at this again, we want to look at, are we having the resources that we need in order to deliver? And one of the things that I like to point out is that if you feel like you don't have the resources that you need, these are the type of survey results that you can point to, right, to your boss, CFO, CEO, to tell them, look, we are falling behind. It's absolutely possible if you are behind the curve on Treasury best practices, that can be a competitive disadvantage to your company. So being able to communicate that is critical, and especially in today's world. People are excited about employee retention. One of the things that I would lobby for, and that I see quite often, is candidates and people are looking for companies and want to stay where people are investing in technology. So keep that in mind. We ask, what's the strategic role? So again, glad to see 57% increase. We had 60% last year. So we're ticking, in the right direction for us, Treasury, to have more impact and earn that role as key advisor. And then it should align, but I kind of want to level set people. Time spent on strategic activities. So that's good. Then we'll ask about technology, but hopefully this is fueled by investment technology allows us to spend more time on value-add activities, right? So increase significantly, 30%. That would be great news for me, and increase somewhat. So you have over 2/3, 81% saying they're expecting, right? We have to let them do it, but at least the expectation is out there that this is going to be the case. So that's another exciting thing. We have all these responsibilities and all these other roles and complexities, but the expectations of what we're going to be doing and asked to do seems like they're asking us to be more strategic, which is going to empower us to become that key advisor to the CFO. So that's exciting. Also, in looking at the folks, so we wanted to say, okay, are we going to invest in our people with upgrading skills? If so, what are the skills that we are going to focus on? Most important skills to upgrade. So cash management, data management. What sticks out to me here is that if you're the treasury manager, and cash management is at the top of your list, that would be a little bit scary to me. I would hope that you've got the folks on your team ready, because I think that's our core responsibility in Treasury. So anything here stick out to you, John?
Yeah, I think that we've seen a pretty consistent trend year over year of cash management being a top skill to upgrade. Obviously, cash management's changing, with the evolution of how you connect with your banks through APIs and things like that, facilitating more real-time cash management. So I think the market's taking note and saying, hey, we have to upgrade our skills to keep pace with that as well. So, and then the two data topics, it just seems like, obviously data is becoming such a huge topic within finance in general, but there's definitely an acknowledgement within Treasury of the value that the data that they hold is, right? That's no longer, hey, go on the e-banking portal, download the data, and just keep it to ourselves, keep it in this sort of siloed fashion, right? It's more about, hey, how do we analyze this? How do we share it across the business? How do we drive analytics? And you can see that's really top of mind for companies going into 2023.
Right, and then it just kind of comes to my mind that, right, if we're gonna invest in upgrading these skills, right, cash management, data analytics, people need to have the right technology, right? And also, what doesn't get enough airtime is how much technology can facilitate collaboration and can help you enhance your communication skills as well. But that's a topic for another webinar. Just kind of, this is just for you to think about. I wanted to look at most important skills. We still see cash management and data management, but we'll look at enterprise a little bit higher tilt on the software skills. So just something for you to think about, and especially really try to identify where you're at compared to your company and what your objectives are, right? And think about your own department. And maybe it's just as simple as looking at the big list that we had and thinking, where are areas where I need to invest? Where am I at, right? Where are we? Where do we need to get to? And how are we going to get there? Are we going to train up, or maybe you're going to look to add staff as well? So let's turn to, we touched on it. What about the resources that our Treasury is going to have to deliver on success? Well, we talked about skills. What about number of people? So we talked about a couple years ago, I think, some people are afraid of automation and Treasury and AI and RPA. Well, that means Treasury jobs are going away. Well, what we've seen the past 2 years, and I've done this, I think, myself a couple years before that, that's actually the opposite. So 48% of companies are expecting to add Treasury staff. Not that we're not going to still be thinly staffed, but that is a really solid number. And then if we look at that by company size, again, we still see that, some really solid numbers. Again, complexity going up, strategic role going up, and we're going to be able to add that staff. So that's encouraging. What about professional development? So are we going to scale up here? And good to see that increase, right? Professional development opportunities are going to increase. Another survey if you want more details on what those opportunities are. I'm happy to have that conversation with you offline. We just didn't dig on that topic this year, but again, looks like we are doing well. So before we kind of transition and talk a little bit more about technology, just want to ask your response for how easy it is to generate a cash forecast, and we'll have John dive into that a little later in the presentation. But just, is it easy, very easy, neither difficult or easy, difficult or very difficult? So again, if you're interested in receiving certificate of attendance for today's webinar, please send an email to Ernie@treasurywebinars.com. We appreciate everyone's consideration in answering all the survey questions today. Also want to let everyone know, tomorrow I'm going to be participating on a TIS coffee talk where we will have several thought leaders where we will give various opinions on a few of the themes here for this survey, but also take this a bit further. So TIS has done a great job, not myself, but some other renowned thought leaders across the globe. So if you're interested, if you signed up for that webinar, just go ahead and let me know. I'm sure John would love to have you on the webinar, and I'd love to have your thoughts as well. So let's go ahead and close that. Then we'll take a quick peek here. To me, I would love to see this number like flipped, right? So easy, very easy. So I'm a little bit surprised that we have so much in the difficult, very difficult, given the technology adoption that we're seeing. So John will definitely be diving in. We did dive in on cash forecasting in the survey. So interesting there. John, is this anything stick out to you here?
Yeah, and I think it's very interesting that, less than 25% think it's any degree of easy to create a cash forecast. I have to admit that kind of echoes what we're hearing in the market as well. It's, a lot of people are spending a lot of time collecting, aggregating, standardizing data for their forecast, right? So spending more time creating it than analyzing it, right? That's kind of the common pain point for a lot of companies. And yeah, it's interesting, as you mentioned, we'll get into this a little bit later on in the presentation, but I actually think these results might be a little bit more realistic in terms of what I'm hearing than some of the results we'll see later on.
Right. Yeah. So what we'll do is we'll go ahead and transition. John will take the wheel. We're going to talk a little bit higher level on the technology landscape and the survey results. and then we'll dive in a little bit deeper into cash forecasting, but also emerging technology. So John, take it away. The floor is yours, my friend.
All right, great. Thanks, Ernie. Yeah, so we obviously can't talk about 2023 trends without talking about bank APIs. And as you can see by this survey result here, nearly 75% are already using APIs in some sort of capacity, either for balance reporting or for balances and payments as well. With another 20% looking to adopt APIs in 2023. Probably worth noting, we didn't ask people, hey, have you moved all of your processes over to be driven by bank APIs? It's just are you exploring it in some respect? And I think this is definitely indicative of the market trend. People are really interested in this topic, looking to understand the use cases, starting to explore it, right? So it's definitely a topic that I know the community has been pushing directly with their bank relationships as well, which is nice to see too. This one's a little bit of a year-over-year comparison in terms of the technologies companies plan to adopt in 2023, looking at 2022 on the one below here. And nearly across the board, everything is increasing, right? So there's just sort of more of an expectation of adopting these technologies next year. But what stands out to me, 51% versus 29% looking to adopt AI in some sort of fashion, right? The other one that definitely jumps out is the real-time payments. That has a nice 15% bump. That's another API use case, obviously there, and companies looking to take advantage of that. We took EBAM off the results, or off the survey choices from last year into this year, and we put account validation and fraud prevention in there instead. And it's interesting to see that nearly half of organizations, or a little more than half actually, looking to adopt some sort of solution there too, as well, to combat some of the fraud threats in the market.
John, can you give us a real high level definition, just for make sure we're covering our basis on what would be a data lake and virtual accounts, just to make sure that everyone is on board with that?
Yeah, for sure. So data lakes is definitely another trend. Obviously, it's one of the sort of lesser categories here, but this really involves taking all your data and dumping it into some sort of standardized database, right? Sort of normalizing this data, putting it all into a single database. And this is from all sources, right? Treasury data, ERP data, FP&A data, and then allowing applications to kind of pull from that data lake versus integrate with applications directly to pull things in sort of a more one-by-one basis. So this is definitely an interesting strategy. We've seen a lot of probably more upper mid-market to enterprise level organizations adopting this strategy to drive, for example, their cash forecasting processes, where they can kind of get all that data into sort of one cohesive database and structure to be able to leverage a tool on top of that. So virtual accounts obviously pertains to not maintaining necessarily physical bank accounts, but more of a virtual sort of identifier on bank accounts. And this has a lot of benefit for organizations in simplifying their account structure. But where the virtual account piece really comes in is you don't lose the tracking, right? You can still kind of segment out your activity based on sort of a virtual account identifier. And this is definitely another topic that's picking up a lot of steam there. Obviously, Treasury is always looking to simplify their account structures, cash management structures, and ultimately reduce bank fees, right? So I think that's really what's driving that topic quite a bit.
Thanks, John.
Yeah, moving to the next slide here. Areas where companies are looking to invest in 2023. I think we're seeing really similar results to some of the slides Ernie presented earlier here today. 55% saying cash management, driven by the topics we've talked about a little bit already. The move to real-time cash management, bank APIs, and things like that. Payments really close behind, but payments is a hot topic in the market as well, with some of the sort of advancements in payment technology, real-time payments and even sort of faster payments becoming more available in the market. And I think that the results are probably driven a little bit by the audience, but I was surprised to see AR automation so low here at 32%. I don't know, Ernie, if you have any thoughts of why that might have scored so low on this particular survey?
Yeah, I mean, I don't know. It's hard to say. I mean, for me, I still think I would say the reason that it's lower than AP would be that we are just seeing that, right? I think we're farther along the adoption curve. It's actually been out in the market a lot. So I would say that, we have 243 responses, and I wouldn't, if we had a much broader audience, I think those numbers would be a little bit tighter, but we're still seeing a lot in AP automation. You just look at the marketplace, right? If you look at the number of companies, new firms, VC money going into AP automation. I think part of it is the education part, and I'm doing what I can to really focus on that AR automation, but I don't think the education and the benefits are out there as much. And I think people are more used to leaning on their ERPs in that space and not really seeing the value on that. But that's a topic for another webinar.
Right, right. Yeah, I think it's always interesting to break down these results by the demographics of small, mid-market, and enterprise organizations. And the thing that really sticks out to me here is, the second category over, account validation and fraud prevention being a big topic for small companies. And I think from a fraud standpoint, previously small companies kind of flew under the radar because the fraudsters were always attacking the enterprise, looking for that one big sort of score, right? That one big fraud hit. But now those attacks are being launched just a lot more frequently, smaller amounts, really targeting the AP process, the supplier master, looking to update instructions in the supplier master to a fraudulent account. And so the small organizations are facing a lot of those same threats today and looking to sort of catch up on in terms of investments. Account validation also has an aspect of not just validating the beneficiary, but validating the actual payment instructions before you make that payment and making sure that the routing information and account number are actually correct, right? So there could be an operational component of that as well, where small companies are trying to prevent returns and a lot of the operational processes that sort of follow from that as well. And then you look at the enterprise, definitely leading the charge on the AI and real-time payments, sort of adoption here, really focusing on sort of what's the next step here in my technology maturity curve, right? And I think there's no surprise there, but it's an interesting trend to see for sure. Crypto is still very, very low, but I thought it was interesting to see the size organization with the least interest in crypto is the enterprise level, right? Maybe they just don't see where it fits into their sort of treasury management plan. It's not an investment. It's not yet a sort of popular transactional currency, but it seems like small and mid-market companies are much more willing to explore the use cases around cryptocurrency.
Yeah.
And then really your main objectives for technology adoption next year, this question that we asked here, you can see really almost a third of companies responding in the middle result there to improve the systems used by my department in order to support recent growth. So nice to see so many companies falling into that category, having grown so much over hopefully the last few years and just sort of trying to catch up their technology to properly suit that growth. Right behind that, gain better visibility into key data to drive better decision making. This is the data analytics, the data management topic that sort of permeates throughout the survey results. Big topic for 2022 and looking into 2023, where companies looking to leverage the value of their data more. And I think it's nice to see automate manual and repetitive processes being down there at almost 10%. So to me, hopefully that signals that a lot of those initial tech investments to sort of automate processes, get rid of the manual work involved in a lot of treasury functions have already been undertaken and are sort of starting to pay dividends. You see some of that too in the results where we saw people looking much more to move towards strategic activities from a day-to-day basis on treasury versus manual sort of operational tasks as well. So. And then where are people getting their news from? How are they staying on top of what's going on in the fintech space? You can see there's definitely a lot of trust in the analysts and consultancy firms. I think we're definitely seeing this as well. It seems like companies looking to undertake a tech investment will oftentimes partner with a consulting firm to help them launch that RFP, or maybe even just to do the initial shortlisting, right? Who are the providers I should focus on here based on those organizations' knowledge of the market itself. But right behind that, events and webinars at 56%, which I think has crept up quite a bit. I think we asked the same question in last year's survey. I know I was at AFP back in October. I've been to a few in-person events this year, and it seems like the attendance is starting to increase back to pre-pandemic levels, and everybody who's there is really interested in learning. They want to know what's changed in the market, what new providers are out there, what their peers are doing. So it's nice to see that be such a valuable source of information to people. And then the software vendors obviously down there at like 25%. So not a lot of trust in the software vendors, but hopefully we can change that perception a little bit too. The most important criteria for assessing a treasury tech solution, I thought this one was very interesting, but it definitely ties in nicely to the previous results. So the top two categories here, support for modern banking technologies. You have to think that they're alluding to banking APIs there, right? and support for modern analysis technologies such as AI and machine learning. We saw huge increases in year-over-year sort of interest in those technologies, right? So that's driving a lot of the decision making, it looks like, in the tech space. I think people know that these technologies may not have reached full maturity, but I think if you're selecting a solution now, people want to know, hey, we got on the right train here. You know, we're with a provider who's going to be able to support and prioritize these technologies going forward. And then towards the bottom here, market reputation of vendor at only 6%, which was a bit surprising. Cost, you know, not the biggest consideration anymore, which is nice to see, right? People are valuing function much more of a cost, but again, this is the most important, not necessarily, you know, the criteria that matter. I'm sure cost is still a big, cost and market reputation is still big factors here. So moving into the cash forecasting topic here, you know, this one, you know, sort of gives a summary of the results here for what people are using to complete their cash forecast. You can see TMSs still have sort of the lion's share of the market here at just about 45%. And the next most popular solution is still Excel. You know, Treasury can't get away from Excel as much as we would like to, right? And then you start to see some of these other categories, which I have to think, I don't think we did this last year, but I think that these ones are probably starting to increase a bit, you know, in terms of ERPs. There's a lot of new cloud ERP systems, some of the sort of bigger systems that are offering Treasury modules, forecasting tools, and things like that. And as I kind of alluded to earlier in the conversation, some Treasury departments are being forced into sort of seeing if they can make those solutions work for their day-to-day cash management needs. And then, you know, specialized cash forecasting solutions, which are, you know, so-called sort of best of breed applications for forecasting. TIS actually offers one of these as well. I think this is another area that's starting to increase market share. You know, we're seeing a lot of people go from TMS looking for something more advanced, like a, you know, forecasting tool that can apply AI, machine learning, or some more sophisticated forecasting algorithms, or that can support a longer range forecast. But it seems like as organizations looking to mature along this technology curve, they're looking more and more at those solutions as well. So hopefully we're seeing Excel decrease, some of these other categories increase, but it's still making up a pretty big portion of what people are using. And this is just the demographic breakdown of that previous results here. And I think really no surprise for me if you look at, you know, who's the primary Excel users. It's small companies, right? Those that maybe haven't undertaken tech investments yet, or might have the mentality, hey, we're not big enough to need a TMS or some sort of Treasury technology solution. They're still using, you know, predominantly Excel here. Enterprise leading the charge on those using a specialized solution, although that's still a relatively small percent, right? But you can see that sort of migration along the technology curve kind of impacting the enterprise level organizations the most. And likewise on the ERPs, you're seeing that more in the mid-market and enterprise level. I think just because of the sophistication of the finance applications in those ERP systems tend to be towards the more enterprise level ERP systems that we're seeing here. So.
Oh, we already did this, but I wanted to share it again. So we took our survey results. I'll remind everyone. We had a huge percentage of folks. So we had 40% in the middle. 33% was difficult, 4% very difficult, and easy and very easy from our respondents was 22%. And so these are the survey results.
Yeah, so this is almost flipped with our poll, I think is what we were alluding to earlier today, where it seems like, you know, based on these results, you know, it was 65% or so were assuming, you know, generating a forecast was pretty easy for their company, which really surprised me too. I don't know if it surprised you, Ernie, but it's definitely not what I'm hearing in the market. I'm hearing that, you know, Treasury spending a significant amount of time on this activity, just creating the forecast in general.
I mean, for me, and I don't know, I wasn't trying to steer the survey, but I think we saw this result last year, so I wanted to see, is there a way that we can, you know, kind of explain this, or does it make more sense on the surface? So we asked folks to look at the purpose of the forecast and a couple other things.
Mm-hmm. Yeah, I thought this was interesting too, with the two kind of top categories here being, you know, tied to the balance sheet forecast, so kind of doing that reconciliation of where the cash position is going to be, maybe even where the debt position is going to be, and then managing the actual capital structure. So I saw these two results and I thought, hey, you know, maybe people are mainly focusing on, like, you know, infrequent long range forecasts, like creating a monthly forecast. Obviously, you don't need a day-to-day forecast to kind of project out these more strategic activities. At 46% managing short-term borrowings, that's more of a day-to-day cash management type.
Yeah. Yeah, I mean, for me, I would imagine if I would have asked this to the audience, right, I would think we would have seen a lot more probably, say, managed short-term borrowings. And to me, doing it that frequently and wanting to be that tight, right, on the accuracy, that might explain the difference there, right? And then in terms of the success of it, would be, what is the accuracy that's going to impact your decisions? And of course, you want to tighten that up as much as possible if you're doing borrowings, right? But if you're doing just capital structure, balance sheet forecasting, you might not see a big benefit from going to even to 70% to 80 to 90%. Well, so point that out. All right.
Yeah. But yeah, even this result indicated that people are forecasting pretty frequently, So I think the weekly plus daily number here is what? It's like just over 60%. It's probably just under 30% doing it less frequently than that, or a little bit more than that actually. So yeah, it seems like people are doing at least, I think for us, the most common frequency we see is weekly, and then we see companies looking to move towards daily cash positioning at least, or intraday cash positioning, or even updating the forecast sort of dynamically, every single day as well. So, but yeah, it did seem like there was, a lot of people who were using their forecast for like weekly cash management purposes based on the results of this survey here. And then, breaking that down again by this demographic of company size, nothing huge here that really stands out to me. Like I said before, that weekly is definitely the most common frequency that we're seeing, and that's across all company sizes. That's pretty much what you're seeing as well. You can see maybe a smaller portion of small organizations doing this daily, but we also saw that small organizations are still using Excel. A lot of them are. So obviously updating the forecast daily is a big burden when you're doing it manually. But I think you're starting to see definitely a shift towards the left here for companies going from monthly, if they're doing things monthly, at least doing it weekly, but even getting close to daily. And then obviously very, very few organizations still doing a quarterly cash forecast at this point. All right, and so the biggest priority for improving the cash forecast in 2023, so really the one that kind of stands out here at the 30%, the third from the bottom here, is improving the accuracy of the cash forecast for non-Excel solutions. So these are companies that have adopted some sort of a tech solution, and they just main priority is just to get that solution to be more accurate. Maybe driven by some of the unpredictability. It's been tough to get an accurate forecast for the last 2-3 years with sort of a lot of the volatility for receivables and some of the adjustments companies are making on their payables to sort of combat that. But and then you kind of have a fifth above and below that, those that want to extend the timeline of their forecast, those that aren't doing Excel, and those that want to move from Excel to a software-based solution, right? Kind of the next two, the biggest criteria there. So, yeah, and I think on the next slide here, we have a sort of a demographic breakdown of these results too, which is really interesting. And obviously those that are moving from, Excel to a TMS, you have 26% of the small companies, those that are still using Excel, right? And then those that are looking to extend the timeline, a lot of that's falling into the enterprise market, which I think is interesting too. And that's definitely a trend that we're seeing. As I mentioned before, companies looking to move from a TMS or Excel-based forecasting solution to something that's more specialized that helps them get, to a longer time frame, a more accurate time frame, model different assumptions and things like that, right? It sort of seems to be what a lot of organizations are striving for. And the forecast in general is just playing a bigger role, I think, in how Treasury manages cash on a day-to-day basis, and more questions are coming in about the forecast and, how we doing on cash, or how close are we to last week's projection and things like that. And I think Treasury just wants to be armed with the tools to be able to answer those questions without a lot of manual work to dig up those answers. So.
John, let me jump in here. Sorry to interrupt you. We have a question or two, which always comes to my mind as well. I touched on it a little earlier. So putting your practitioner hat on, which you always have on, but just to make sure it's on there right now, how do you look at what's the right level of accuracy, right? What is it, how much do I invest to get, to that level? So what's the metric, or what do you see? What did you use and what do you see companies using to kind of benchmark what that needs to be?
Yeah, so I think it depends on how companies are creating that forecast, first of all, you know what I mean? So, what are they using for the data inputs? We see companies at a very basic level looking to build out a forecast based on cash trends. What are my historical averages over the last
Yeah.
10 weeks or so? And then, so obviously trying to measure accuracy based on something like that is not real scientific, because you can just basically say, hey, it looks like it was an abnormal week compared to, the last 10 weeks or something like that. But other companies, and we try to push for this too, because we think it drives the most value and the most accuracy in the forecast, are actually taking, extracts from their financial systems. They're looking at invoice level AP and AR data and how that translates into cash. And if you're doing that, you should be able to project at least, say 6 to 8 weeks out, at the point where obviously that data starts to dry up pretty accurately, right? And if you don't, there might be some other issue at play there in terms of what your forecasting methodology is. So we always say measure it based on, the methodology you're using to drive the forecast, and then, look for really the reasons why. Is it forecasting error? Is it, business performance? You're assuming a certain revenue level or a certain DSO and that didn't come to fruition. What are really the reasons? So, is there a percentage that you strive for? Yeah, I mean, you want it to be relatively accurate, 80% or above, but more so it's important to understand why it's not accurate, I think, and be able to have the right level of insight into that.
Exactly. I dovetail. To me, it's about, to me, I think sometimes the low hanging fruit for a lot of companies is just the visibility into AP and AR. I think in Treasury, we've been stuck on what happened instead of why it happened. And as soon as we get visibility and collaborate with AP and AR, we understand the why it happened. So that helps us improve our forecast, but maybe even get better information, right, from our AP and AR colleagues, and that will drive our accuracy up quite a bit.
Yeah, agreed. Yeah, and switching gears here a little bit to risk mitigation, what's the biggest focus here for 2023? And then, you see elimination of manual payments, which has been, I think it's almost been like a sort of a utopia dream state for Treasury for quite some time. Everybody wants to eliminate manual payments. Good recognition that that's the riskiest sort of activity within Treasury and the best opportunity for fraud to sort of introduce itself. And then, definitely a trend that we're seeing is the one above that, where a lot of companies want to outsource the maintenance of vendor payment instructions, either through some sort of vendor self-service portal where they maintain those instructions directly, or tapping into some sort of supplier network where those, instructions are maintained independently. And I think this is really to combat a lot of those fraud threats that are going into AP these days. The fake wire instruction change requests are looking to get a fraudulent account into the vendor master, right, and then sort of leave that undetected for a period of time so that they can generate some fraudulent transactions. So no surprise to see that as well. In terms of breakdown here, once again, probably no huge trends here. You can see for small companies, they are looking at sort of the low-hanging fruit or the sort of the low investment, high impact kind of risk mitigation activity, which is training. But maybe a lot of other size organizations kind of already have a pretty good training program in place here. Likewise, segregation of duties. I was a little bit surprised to see enterprise at 20% for segregation of duties, because you think that topic would be pretty well handled. But yeah, with enterprise and small organizations looking to improve there, and it's definitely the enterprise levels that are probably most focused on, outsourcing that vendor payment instruction maintenance I talked about before. They have the biggest vendor masters, obviously. They have, multiple different AP processes, different centers, different regions, and things like that. So just more opportunity for attack from those fraudsters.
All right. Thanks, John. Let me go ahead and take the baton back from you. So thank you so much, John, for sharing your insights, not only as a longtime practitioner, but having that really close view to the market and all your clients and prospects, and still being a thought leader in your own right. So thank you so much, John. So we wanted to ask people what are their top hurdles to reaching their Treasury goals. And to me, this was a little bit out of line with what we saw, but the data is what it is. So availability of finance and Treasury resources, we have 40%, but then I thought about it a little bit more. I said, yeah, well, it looks like people are investing, investing in technology, right? And so hopefully that number will come down. And then IT resources, again, what I always try and communicate is you're adopting, especially cloud solutions, that number should really go down. I was pleasantly surprised to see that the alignment, right, the roadmap was only 11%, because we used to see that as a much higher level. John, any comments on this result for us?
Yeah, I mean, it's availability of resources both on the Treasury and IT side. That seems like to be the biggest sort of roadblock here. So hopefully a lot of that's being, we saw results earlier that said Treasury is going to be hiring more and more, right, adding new roles and things like that. Hopefully that helps the organizations to be in a better position to reach their goals.
And I get the good news is, like I said, Treasury, I think we're seeing, we're getting, at least the companies surveyed, and what I'm hearing is companies are investing more to empower Treasury success. So just the little word cloud here, just of interest, right? What do we see? Better technology, right? Staff, control, technology, right? Employees. So we are hitting all the high notes, the survey themes. Again, I'm just go through these at a high level. As I go through these, I'm going to go ahead and launch our final polling question here to make sure that I take care of that. Just want to let you know that you can request a copy of the survey white paper and whether or not you want to learn more about how to empower Treasury success at your company. So what we saw, expectations of Treasury are on the rise, right? Just a few key things. 77%, right, indicated are going to increase, and significantly over 25%. Strategic roles on the rise, but we're going to invest in technology. But we're also really interesting to see that so many people really the emerging technology is a little bit farther along than I would have thought, which was really good to see. I think some of the things, and hopefully some of you will join us tomorrow. I think you'll get some different perspectives on what we're seeing, right, and what we're not seeing. And I think what you'll hear tomorrow from one of my favorite subject matter experts, Craig Jeffrey, is he'll probably talk a lot about fraud prevention. So I think that's something that's really important, and that he might be seeing even more of a focus there, really important. And my soapbox is we need to invest in having more control, to invest in areas that impact our success in Treasury, technology, AP, AR, FP&A. And finally, I just want to say it's good to see that automation is not really, in features, it's not something to be afraid of. It looks like it's empowering us, right? We're getting more colleagues, we're getting more training, and so I think that's incredibly important as well. So John, do you have any final thoughts you'd like to leave with us? I know there's a lot that's been happening at TIS. You want to give us, some updates? You mentioned the cash forecasting. I see you have a lot of other interesting modules. Give us an update on what we're seeing and what we should be looking for from you guys next year.
Yeah, so probably a lot of interesting stuff coming from us. Obviously, we push more into the sort of the cash forecasting and cash management. Yeah. We've added, forecasting capabilities to our offering. Doing a lot of interesting thing. We're listening a lot to the market in terms of how they want to combat a lot of the fraud risks that are out there, and just efficiencies around payment processes. So we're launching a lot from that standpoint, and obviously looking at the sort of the emerging technologies like AI and machine learning, how those does fit into our product, what sort of use cases we can drive. So that's kind of in motion as well. You should see some nice sort of announcements from us there. And then of course, we're keeping a close eye and sort of participating in the shift for bank connectivity protocols to APIs and things like that too. Yeah. So I think all these topics that we talked about here today, we have our hand in one way or the other. So if anybody's interested in learning more, always happy to connect and chat about that.
All right. Thanks, John. Before I wish everyone adieu, just want to once again thank TIS, their commitment to thought leadership. Again, to me, it's more important they're supporting the success of Treasury, AP, AR, and FP&A and finance professions. And part of that is if you go on their website and look at their content, they have amazing content, even though some of it's not mine. They have amazing content. They're offering John to help us speak and tapping into his knowledge. So we sincerely appreciate that. Again, anyone who's not registered for the TIS Coffee Talk tomorrow, please let us know if you're interested in doing that. Appreciate your consideration in taking the survey And finally, I appreciate each and every one of you. Until next time, make the rest of your day great, everyone.